Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 17th, 2025, and we're diving into Worthington Enterprises' fiscal 2026 second quarter earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Worthington Enterprises, a leader in consumer and building products, has just released their Q2 results, and there's a lot to unpack, from their revenue growth to strategic acquisitions.
Revenue and profitability overview. Let's start with the top line. Worthington Enterprises reported net sales of $327.5 million for Q2 2026, marking a 19% increase from the previous year. John, what drove this impressive growth?
The growth was primarily driven by higher volumes in their building products segment, including contributions from their recent acquisition of Elgin Manufacturing. This segment alone saw a 31.9% increase in net sales, which significantly boosted overall revenue.
And how about profitability? I see that adjusted net earnings increased by 7%.
Yes, adjusted net earnings rose to $32.5 million, and adjusted EPS increased to 65 cents from 60 cents. This improvement is attributed to operational efficiencies and a strong performance in their building products segment, despite a slight decrease in net earnings due to some restructuring expenses.
Strategic initiatives and acquisitions. Worthington has been active on the strategic front as well. Can you tell us about their recent acquisition and other initiatives?
Absolutely. Worthington announced the acquisition of LSI Group for approximately $205 million, which is expected to close in January 2026. This move aligns with their strategy to expand in the metal roofing component space. Additionally, they repurchased 250,000 shares, reflecting confidence in their future prospects, and declared a quarterly dividend of 19 cents per share.
How does this acquisition fit into their long-term strategy?
It fits perfectly with their growth strategy of acquiring leaders in niche markets. LSI Group's expertise in commercial metal roof clips and accessories complements Worthington's existing portfolio, potentially driving further revenue and earnings growth.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. Worthington's operating income saw a significant increase. What were the key factors?
Operating income rose to $12.3 million from $3.5 million, driven by higher volumes in building products. However, equity income decreased due to lower contributions from Clark Dietrich, partially offset by WAVE's performance. Despite these challenges, Worthington maintained a strong cash position with $180.3 million on hand.
Looking ahead, what can investors expect from Worthington?
As we move into the second half of their fiscal year, which is typically stronger, Worthington is well positioned to capitalize on growth opportunities, especially with the LSI acquisition. Their focus on strategic investments and operational efficiencies should continue to drive shareholder value.
EPS forecast and analyst expectations. John, let's discuss the EPS forecast. Analysts were expecting 71 cents, but Worthington reported an adjusted EPS of 65 cents. How did the market react to this?
The market was slightly disappointed as the actual EPS fell short of the forecast. The flat year-over-year EPS performance, despite revenue growth, suggests that while Worthington is expanding, they are also facing some cost pressures and restructuring expenses that impacted their bottom line.
Do you think this will affect investor sentiment?
While the EPS miss might cause some short-term volatility, Worthington's strategic initiatives and strong cash flow position them well for future growth. Investors should consider the long-term potential rather than focusing solely on this quarter's EPS.